Monday, September 27th, 2021, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at what gold is, a very basic question. And many of you, of course, know what it is, but I think it's always good to refresh our memories and also to let those new viewers, new subscribers, yes, onto the topic, because I always get new viewers and new subscribers, new people interested. Yes, I will never stop trying to let people know what it really is and how important it is in the monetary system, despite what we hear from mainstream economists, from politicians, and everyone else, from central bankers. Before I reference a Pocketbook of Gold for looking at what gold is, and this was written about 10 years ago by Jim Sinclair and Peter Carlin. Jim Sinclair was considered Mr. Gold in the bull market in the 70s. He's still around. He has his own website, JS Mindset. He's now also paired with Bill Holter at JS Mindset. I started following Jim Sinclair and his blog back in around 2002. But let's quickly look at some of the headlines this morning. There's some interesting things going on here in the UK. Yes, there's a lot of discussion whether we have a fuel crisis or not, but be as it may, we do. And it looks like the government is planning for the army to help ease mounting fuel crisis. Prime Minister will be asked to decide on Monday whether soldiers will be drafted in to drive petrol tankers, gasoline tankers. That's what it means. Panic buying haulage body with anti-Brexit drive was behind fuel crisis leak. Claim number 10 sources. Another writer here, Ambrose Evans Pritchard, one of the economics writer, says Britain is doomed to a winter of discontent, warns Ukraine's gas king. So yes, there are a lot of people out there who think what's going on is manufactured, that there isn't any crisis. But I think there is in this case. I don't believe in everything the mainstream media tells us, but I've seen this coming back in July. I thought the UK economy was on the brink of collapse, basically because of the mindset that they've created with the lockdowns, with the restrictions, scaring people, and plus all the money printing and that this country has. And it's not just the UK, of course. Most Western countries are in the same situation, and we're seeing the rising prices. We're seeing also policies that capped prices of energy come home to roost. These policies always create shortage. Richard Nixon tried to control prices in the 70s, and it created shortages and stagflation. And there's a lot of talk about the political situation in Germany. And I think that could be important, but I'm not going to cover it too much. They had some major election there. Apparently, it's very uncertain whether the main political parties will be able to create a government. They'll have to form coalitions. Yes, we've got the beginning of the month this week. 1st of October is on a Friday. Usually non-farm payroll is on the first Friday of the month, but being that it's the 1st of October, I think it's going to be next week. So we won't have the non-farm payroll number, which is a key number for the markets, until next week. There's a lot of talk still about the debt ceiling. I see an article here saying money market funds are getting ready for a debt ceiling debacle. So this is from Bloomberg. So now let's get to a Pocketbook of Gold, a survival manual for monetary mayhem. And I think we are approaching that. This book was written after the mayhem of 08-09. It's taken longer than most people thought for this crisis to germinate. But if you look back at the hyperinflation and the collapse in Germany and Central Europe in 1922 to 23. The crisis really started in 1914. So even then, it took about 8 to 9 years. So it's not surprising, though, that it could take a little longer to germinate in this case, because it's a global problem. Everyone's doing it. So let's go to the sector here, or chapter 2. Very simple question. What is gold? And we'll first go through what they people think gold is. And it says, not surprisingly, when discussing an emotional subject like gold, there's widespread disagreement about what exactly gold is. Many call gold a commodity and look towards its relationship with other precious metals like silver, platinum, and palladium to assess fundamentals and anticipate price action. Market analysts have also long depicted a symbiotic relationship between gold and crude oil, seeing them as closely aligned barometers of inflation that should roughly move up and down together. The quest to explain gold's supply and demand fundamental leads some analysts to write at length on topics ranging from jewelry demand in India and gold used in computers to lengthy tomes on the production potential of various geographical regions and specific miners. Some follow gold's price movements as measured against non-ferrous industrial metals like copper and zinc, while others even profess price relationships with agricultural commodities. While some of these relationships have elements of legitimacy, they miss the overriding truth about gold. Gold is a currency. It is as simple as that. Gold is a monetary form of exchange and is not a commodity. Gold is the ultimate, albeit rarely used, form of payments. Hence, the end use of gold is largely storage, not consumption. Through hoarding, to maintain a physical measurement of globally accepted value, the utility of the ability to retain value is that gold has, throughout history, successfully insured against political, military, and economic contingencies. History, the ultimate arbiter of truth, speaks this loudly and clearly. Gold has operated as a monetary medium of exchange for well over 2,000 years, and arguably for as long as 5,000 years. In short, gold has outlasted every empire, nation state, and corporation, as well as most religions. Gold's function throughout history has been to measure and preserve wealth and status and to store value. That is why gold is always called on to reveal its historical role as a currency at times of crisis. Yeah, and you can see why gold is so important in a currency collapse, because when a currency collapses, there's no more measure of value in that society, in that economy. So people always revert back to gold, and silver as well to some extent. In today's environment of monetary dislocation, gold continues to operate as a currency. Gold's detractors say it is nothing but a lump of metal that you believe will continue to operate as a currency. And they are, in fact, completely correct. Gold has earned its respect over time. What naturally carries more conviction for the investor and common man today? The veracity of the only currency to last several millennia, or faith in your government and the world's financial institutions? That should be an easy call. And that's what I've always been saying. When the fluctuations in the paper price of gold get uncomfortable, I always tell people, what's the other option to put your faith and confidence in these fiat currencies, in these governments that are making a mess of the world, these leaders, central bankers who are acting recklessly? So the antithesis of gold as a currency is paper money, or what is commonly called fiat money. The term fiat comes from the Latin meaning let it be done, which essentially means a currency enforced by a government or regime using the payment of debts and taxes. Fiat money is most of the official money operating in the world today. Fiat money is also a method by which governments and central banks control the distribution of wealth in societies. And when a reserve currency in the world, the supply of fiat money markedly determines its value, which of course allows governments and rulers to inflate and depreciate wealth. Most importantly, fiat money has a perfect track record as the store of value throughout history. It has always ultimately failed. Always. Every paper currency throughout history, and without exception, has eventually gone to zero. Conversely, gold has always performed, while all paper currencies have ultimately been devalued into worthlessness. Gold has never had this dubious distinction. It has always retained value, while paper currencies go through periods of acceptance, depreciation, and rejection. Gold remains as the monetary unit of last resort. The unfortunate reality today is that we will all need a last resort. So I'm going to stop right here. There's more to this book, of course. I'm not sure where you can find this, a Pocketbook of Gold, a survival manual for Monetary Mayhem by James E. Sinclair and Peter D. Carlin. You might want to contact JS Mindset, see if they still have some. You might want to look elsewhere, Amazon, eBay, who knows, but it's a great little book, pocketbook. So with that, let's look at where the markets are this morning. It's 8:34 a.m. London time. We've got spot gold trading at $17.58. It's up just over $7. Range has been 61 to 45, 1761 to 45. So we're up just under 0.5%. Silver's up 20 cents or just under 1%, 22.62. The high's been 22.75 and the low 22.35. To the stock markets, the Dow future is up 0.43% or 150 points. The NASDAQ 100 future is up 40 points or 0.25%. And the S&P future is up 1/3 or 14 points. The FTSE is up 37 points or 0.5%. So now to the currency update, fiat currency update. We've got sterling unchanged, 136.80. The euro is down about 1/10 at 117.07. The dollar is down slightly versus the yen at 110.68. And the dollar is down slightly versus the yuan as well at 645.90. Aussie dollar is up 0.2% at 72.75. And the dollar is down 0.25% versus the Canadian dollar at 126.20. The Kiwi dollar or the New Zealand dollar is unchanged at 70.18. To the commodities now, WTI crude is up 1%. It's been over $75 today, overnight. It's now at 74.71, up 76 cents. So no let up in the energy sector. Looks like the fiat currencies are continuing to drop versus energy. Notice that I didn't say that prices are rising. No, it's the currency that's losing value because, as Jim Sinclair said here, they will inflate as much as possible the paper money, and it's going to become worth less and less versus real things. A high-grade copper is down slightly this morning at 427.50. Natural gas is up 3%. Not good news for us here in the UK, nor for people on the continent in Europe. It's at 536. I think last week we corrected back to 480, and now it's just raging ahead, up over 3%. And just to finish off, a quick look at the 10-year yield. 10-year yield is down about 1.5 basis points at around 1.44%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.